The smart money is clearly starting to move in. That to me is the indication, one big indication of the start of a big move.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2024 while supplies last. First, we feature 1 ounce 2024 American Silver Eagles at just $5.50 over spot. It's a limited supply, so there's a maximum of 1,500 ounces per order. Next, 1/10 ounce 2024 American Gold Eagles at just $51 over melt. It's also a limited supply, so a maximum of 150 per order. And finally, 90% constitutional silver pre-1965 mixed dimes and quarters at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Peter Krauth from the Silver Stock Investor newsletter, and also the book, The Great Silver Bull. Peter, thank you so much for joining us today.
Elijah, as always, pleasure to be here with you.
Well, it's great to have you, especially as we see silver breaking through the $28 level. Gold has been leading the way and has broken into new all-time highs. It seems like every day now. We're above 2,300 as we speak here on Wednesday. Your perspective on the recent rally we've seen in the last few months, and especially in silver in the last couple of weeks.
So yeah, thanks for that. I mean, you're right. Gold is setting new all-time highs. I was at a conference a little under a month ago, and it was actually in Zurich. And it was interesting because it had been about a week or week and a half. Gold had really started to push up, and people kept asking me, "Is this it?" And I would say, "Look, I can never really tell you. No one really knows 100%, but." There was one last major currency that needed to set all-time highs in that currency for gold. And that was actually, oddly enough, the Swiss franc. And it did. It had done so a few days earlier. And so I was saying that I do think that this is it. This is the start of a new sustained rally in gold. We have that one last bit of at least that indicator, the last major currency now setting all-time highs. And so we're seeing that, as you say, we're seeing that daily almost in gold. And we've seen, so really the rally in gold, I think, if you look back sort of on a yearly basis, it looks like it really actually started more like in October, but really took off, as you say, about a month and a half ago. And silver has kicked in along with it. Now, silver has been catching up in the last few weeks. Both look like they've taken off around the end of February. And I actually did a comparison chart looking at some ETFs. So to look at the sector, silver juniors, silver stocks, silver and gold stocks and gold juniors. And the silver juniors was outpacing all of them. So it's really interesting to see we're getting a real sort of kick in this rally now, and silver juniors are doing really very well.
Now, you've pointed out how the silver price has really been capped over the last few years. We've had significant overhead resistance. There are different levels, right, that people look at. The one that's super obvious is $30. We haven't broken above that, even though we've touched it here and there. So your perspective on why the silver price has been so capped? Why is gold breaking into new all-time highs, but silver, it's getting to higher levels, but we're not at all-time highs. We haven't even broken above 30 at this point.
Exactly. So big disparity, like you say, gold at all-time highs, silver barely at half of its all-time highs. And silver always lags gold. We know that. Gold is moves first. It's the king of precious metals. Always has been and always will be. I don't dispute that. But silver can provide better returns. It has more leverage. And as I say, it runs later, but it ultimately ends up catching up with gold and typically outperforms. We've seen that in nearly all bull markets since the 70s. Silver will catch up and outperform gold. Why is it, has it been facing overhead resistance? And I'm going to say that's probably been in the last 3 years or so, 3 to 3.5, 4 years. I had this sense that because we're facing structural deficits in the silver market, so your supply really comes from mining and from recycling. And then you've got what I call secondary supply, which is what typically sits at the futures exchanges, sits in silver ETFs. And the sort of third part of it is physical hoards. People who own silver sit on it. That could be personal investments. It could be strategic ownership. That could be larger investors. So you've got these three aspects. You've got, again, the silver futures exchanges, the ETFs, and then you've got these private hoards of silver. And I kept thinking to myself, well, if there's a structural deficit and the price is not moving, these large consumers, especially on the industrial side, which has now moved to about 60% of the silver market is industrial consumption. These consumers are getting it somewhere. And I started doing some research looking at the inventories at the three major exchanges, the COMEX, the LBMA, the Shanghai, and the silver ETFs. And over the last 3 to 4 years, all of them are down. Their inventories are down 30 to 40%. And if you look at what they call registered silver at the futures exchanges, the registered silver is what is actually silver available for delivery. And that silver is down 70%. So my conclusion is that this is where the large consumers have been getting their silver, and in that kind of environment, not pushing silver prices higher because they've been sort of soaking up this secondary supply that's just sitting there. So I think that they're buying long futures contracts, waiting for them to mature, taking delivery, buying silver ETFs. If you own certain ETFs and you own enough of those ETFs, you can actually go to the manager and say, I want to turn my units into physical silver, and here's the address, I want delivery. So I believe that's what they've been doing. They've been fulfilling their requirements through these means, and it's helped to keep a cap on the price. So how long can this last? So that's sort of the next phase of it, or the next part of it. I think just, given how much these inventories have come down and the rate of growth in demand, both from investment and from industry, I think we're anywhere from 12 to 24 months-ish, where, if this kind of soaking up and draining of these inventories continues, that we're going to reach a point where the inventories are essentially empty, other than perhaps the personal physical hoards. Interestingly enough, there was a report by TD Bank just recently that said nearly identically the same thing. They see anywhere from 12 to 24 months where this can continue, and then the game is over, and we will have essentially run out of this kind of secondary silver. And it's interesting to point out too that recycling has not moved. Mining supply has not moved. It peaked in 2016 at 900 million ounces per year. We're down now to about 800 million ounces for the last few years. There was an interesting bit of research by Bank of America that looked at, they surveyed the 13 largest primary silver mining companies, and they all expected that we are going to see similar mine output over the next several years. So mining output is not responding to the demand. So as I say, this secondary silver really will only last so long.
And most mining output of silver is actually as a byproduct, right? There are isn't it about 70%? So only like 30% are actually primary silver producers.
Exactly. So that makes things even more complicated, and it makes silver what we call in economics inelastic. So demand can go up, and the price may not react even for at least a while. You can get the inverse. Price can go up, will not affect demand and lessen demand. Price can go up and supply will not necessarily react for multiple reasons. So that's a great, as you pointed out, that's a great factor in the silver supply, very particular to the silver mining industry. About 70%, as you say, comes from mining other metals. So it's a byproduct. In 70% of its mined supply is as a byproduct of mining things like gold, copper, lead, and zinc. So another way to look at it is 70% of the mine supply depends on the production of these other metals. So if you think about the mindset of miners of these other metals, they're going to look at their silver production as a byproduct and say, I don't really care what the silver price is. It's not material to my revenues. It's not material to my income. Silver price could be $40 or $50. They'll be happy to accept it. But they're not going to go out of their way to try and produce more silver to try and meet this higher demand. They'll just sell it into the market at the higher price, and as I say, happily accept that price and higher margins because of it. So you've got this weird setup where higher demand can beget higher prices, not have a reaction from the supply side, and therefore beget even higher prices. So you've kind of got this upward spiral. It's going to be very interesting to see what happens. And when silver and gold are very particular for that. People tend to kind of chase the prices of these metals when they go higher. They get more interested when they're setting new all-time highs, and that helps to push sometimes the prices even higher. So I think we're in a spot now, a sweet spot, where it's looking very, very interesting and very bullish for the precious metals overall.
And what is your outlook here for the next couple months? Because obviously we've had quite a run up in the last couple weeks for silver, but do you see silver breaking out of the $30 level and possibly making new highs anytime soon?
So, I mean, I've been saying, and I'm surprised, I've been saying silver is going to reach $28 in the second quarter this year. Here we are, we're 10 days in, and it's already at $28. Honestly, at this point, it's been quite the run up, both metals. A bit of a pullback would not surprise me at this point to digest some of those gains. I'm not saying it's going to be extended or deep, but I could see, perhaps some kind of a quieting or a sideways move, small pullback over the next, say, week or couple of weeks. And I think that we're going to at least maintain and perhaps push higher. I think that the second half of this year could see us hit somewhere around $30, and I'm being conservative. Well beyond 30 would also not surprise me if we reached in the low to mid 30s by the end of the year, if we have this kind of environment and pace continue. 30 and up, 30 to mid 30s by the end of this year would not be a surprise at this point.
You mentioned how the inventories, for example, on the exchanges and the large ETFs are being drained right now. And those inventories, given the current pace, it seems like will only last at most about 2 years here. So what happens when the inventories run dry?
So here's an example. In fact, that I'll address that specifically in a moment. But about a month and a half ago, I was at a mining conference, and a large primary silver producer that is not in North America sells half of their production to China and the other half to the West. Well, the CEO of the company told me that they see it daily. They said that the market is very tight. The Chinese buyers are coming to them and saying, "We are prepared to pay you a couple of weeks in advance. We really need this supply. We will in fact pay you $3 over spot in order to get that supply." And the market is tight in the West as well. But I think that because solar has become such a driving force in the silver market, with now representing about 20% of all silver consumption, just going to the one application of solar panels, and China controlling 80% of that production of solar panels. I think that they really absolutely need it. They're not getting it as they as well as they may try in all the possible sources, offtake agreements, whatever they may have, even going to these futures markets, going to the silver ETFs, they have domestic production. It's just not enough for them. So the market is very tight. This is anecdotal, but I have reason to, believe it and take it very seriously. And I just think that the supply, the mine supply, is not going to react very much at all over the next couple of years. I just don't see it. We have not found much, if any, new silver mines. There's not much being spent on exploration. General mining capex is at decades lows. We've been through a bear market in commodities where the mining companies have pulled in their reins, have cut spending dramatically. The capex has not been there to support higher demand. So what happens is, and we saw it in the last resource bull market, is that demand builds up, stays high, stays sustained high, and it stays there for a while as I guess these conservative or newly conservative, perhaps, mining CEOs see this and say, okay, we need to start reacting to this. We need to start spending on exploration. We need to start spending on capex to build our mines out. And then eventually it catches up, but that could take 5 to 10 years. Finding a mine these days, just from discovery to growing the resource, to getting it permitted, financed, building it, can be anywhere from 10 to 15 years. And different jurisdictions, start to become more difficult or less friendly to some of these projects. So I think that it could take really some time to play out for supply to catch up. And we've seen the primary silver miners do not see it happening. Where you could have some reaction in terms of supply, I think, is probably more than anything. I don't think recycling will be an answer for it either. Is going to be, if anything, on the physical investment side, where you have dishoarding, people selling back into the market. I don't think that's going to be a huge thing either, especially if we're in an inflationary environment, which I think we will continue to be. And so in that kind of environment, at $35, $40, chances are you will have some people selling back into the market and helping to boost physical supply. That may alleviate it a little bit. But then on the other hand, you've got buyers of physical silver who see the inflationary environment and say to themselves, well, I'll take that silver. You're selling it off into the market. I'll happily take it off of your hands, and paying higher than normal premiums even these days for it. So, reaction from supply, all angles of supply, I really see as quite minimal. And so the only answer is higher silver prices, really. And even still, not much supply reaction with higher silver prices. So that's, amongst probably the surest bets in the market right now. There's almost nothing that is more undervalued. You'd be really hard pressed, I think, to find anything across the markets that is more undervalued and better value than silver and silver stocks at this point.
And as for the stage that we're in the bull market, what is interesting, you mentioned on another interview, I believe on Kitco, was that a lot of people are actually selling back right now in the retail space. I know we've experienced that at Miles Franklin here, is people are selling back, which seems like this has not gotten to the point of a mania we're nowhere close to mania. If people are actually looking at the higher prices and saying, well, maybe it's time to sell back. It's when those people are then jumping in that is where the mania starts.
That's a great point. And yes, I did say that. And that was because of some insight I've gotten from the industry. And to your point, and it's great to get your direct experience as well with that. That was something that I had recently read, that bullion dealers are seeing almost on a 2-for-1 basis. Clients are selling back to them versus clients buying. So 2 ounces being sold back for every ounce being bought. That says a few things to me. So it says that you've got some weak hands that probably bought high, see prices where they've either, come back close, depending on which metal and when they bought, back close to what they bought at, and they just are saying, I'm out. I just want to break even. Um, or for other reasons, people are perhaps squeezed monetarily. Inflation's not obviously an easy environment for many. Perhaps they need liquidity, so they're selling into selling back to dealers. They're selling at what they feel are, relatively attractive prices. But as you say, that's nowhere near the kind of environment where you see things really building up towards a any kind of a peak. It's much more reminiscent of the beginnings of a bull market. So there's a lack of conviction. There's very weak sentiment. There's almost no reporting of what's going on in silver and in gold in any of the mainstream media. And so really this is an opportunity. I mean, if people think they have missed the boat, I can say very confidently that the boat is still sitting at the dock. You have a little bit of time to get on board. At one point, yes, it will leave, but you still have time. So I would encourage people, takes a bit of time. You don't have to jump in right away with both feet. Start looking at this seriously, understand the market, do some research, subscribe to some newsletters if you think that you want some guidance, especially when it comes to stocks. And if you're going to deal with a bullion dealer, look for reputation, look for experience, and yeah, I mean the opportunity absolutely is there. You've got tech and stocks at near all-time highs, massively overvalued by so many metrics. Here's a little interesting insight. I was talking to someone from one of the larger silver miners, in fact, just yesterday, and they see huge volumes in their shares trading day in, day out the last few weeks. And so they're talking to the traders at the trading desks from the investment banks, and they're asking them, okay, so what's going on? They want to get this direct insight. And they're telling them they're getting tickets for 10 million shares at a time in some cases. Huge buying going on. Right now, at least, it's the larger names, it's the more liquid names. And they're getting this from the generalist investors. So you've got some really, really smart investors who are perhaps not necessarily, precious metals bulls, but do see the writing on the wall with general stocks at or near all-time highs, especially when you're talking about things like tech, and see the markets, the general markets, as highly valued, highly overvalued. And the very, very smart money is starting to rotate into the deep value. And they're doing it in liquid names, and they're doing it at the lower risk end of the curve, which is certainly the miners, the larger miners. And there aren't that many. So that's what I think explains the big volumes, because the money has to go into very few names. And that's, I think, what's going on. That's why you're seeing such big volumes in you're seeing some of these larger caps just jump 4%, 5%, 8%, sometimes in a single day. It's just tremendous action to watch. And so that's the beginning of the move. And that's why I say that people still have time. I wouldn't wait. I wouldn't waste any time, but they do have time to get started, do research, get involved. But as I say, the smart money is clearly starting to move in. That to me is the indication, one big indication of the start of a big move, and lots of room to run at this point.
It should be exciting in the months ahead. We'll have to have you back on maybe in the third quarter and see where we are there. Peter, if people are interested in learning more, where can they find you? And also the book, The Great Silver Bull.
So thanks for that. The book you can certainly find on Amazon. Just look up The Great Silver Bull. It's available in print, in audio, actually, and in Kindle version. You can follow my work directly at Silver Stock Investor, and I publish the only silver-focused investment newsletter that is out there. I'm also very active on Twitter, or now X, at Peter_Krauth, and I'm also on LinkedIn at Peter Krauth. So multiple ways to find and follow me, and happy to interact with your viewers.
Peter, once again, thank you so much for your time, and God bless.
Elijah, always a pleasure. Look forward to chatting with you next time.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for April 8th through April 15th, 2024 while supplies last. First, we feature 1-ounce 2024 American Silver Eagles at just $5.50 over spot. It's a limited supply, so there's a maximum of 1,500 ounces per order. Next, 1/10-ounce 2024 American Gold Eagles at just $51 over melt. It's also a limited supply, so a maximum of 150 per order. And finally, 90% constitutional silver pre-1965 mixed dimes and quarters at just $2.75 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.